Cheryl, take it away.
All right, let's go here because we have got a beat on the non-farm payroll. 700,000 was the estimate. 850,000 jobs were added for the month of June. We also have, though, an interesting dichotomy with the unemployment rate. We actually went up to 5.9% on the unemployment rate, up 5.9%. So again, 850,000 non-farm jobs, and then 5.9%, is the unemployment rate. Let's dig into the release just a little bit more and look at it for June. Okay, here we go with the full release, and I've got it right here. A couple of things I want to point out for you. Here's where we saw the gains. We saw gains, even though the unemployment rate was little changed at 5.9%. Notable job gains actually occurred in the, get this out of my way, notable in leisure and hospitality, which is what exactly I was expecting. Let me go through some of the more specific numbers here. Okay, manufacturing, we were looking for a gain of 28,000. We actually came in weaker on manufacturing at 15,000. The private payroll data, we were looking for 600,000. We came in at 662,000. So that was actually in line on the private jobs number, and that kind of clues into what we got on ADP on Wednesday. Month over month, the average hourly earnings, and this is the inflation story the Fed was looking at. We were looking for a gain of 0.4%. We came in at 0.3%. So we're not getting that inflationary story on month over month average earnings. If you go to the year over year number, we were looking for 3.7%, which they had just revised this morning. The economists had. We came in at 3.6%. Work week hours, 34.9 was the estimate. We came in at 34.7. I want to go back into the release a little bit to give you a kind of a sense of where the jobs actually gained. Leisure and hospitality, I already told you that, but we also saw public and private education jobs with a gain. Professional and business services, retail also saw a boost, as well as other services. Let's go down now to the labor force participation rate. That came in unchanged. I know Steve Moore was mentioning that, 61.6%. That is the same number that we got in May. Also, they're saying basically that the number of people unemployed part-time for economic reasons, and that's kind of that healthcare, childcare story. That actually was basically flat month over month. And then one more thing I'm going to go here, and as we go through in the leisure and hospitality number, that was an increase of 343,000. Again, that's really the strongest number we're seeing here, Dagan, is leisure and hospitality, the country opening up. I'm not surprised to see that. And they are saying it's because of easing restrictions throughout the country. As far as local government education jobs, that was a gain of 155,000. That's interesting. And then state government education, we saw a gain of 39,000. If you also dig into that professional and business services, companies kind of getting back to the office, there was a gain of 72,000, but that's actually not where we were in February of 2020. So year over year, if you kind of pre-pandemic versus post-pandemic, really not seeing any strong growth there. Retail and trade, we added 67,000 jobs in retail and trade. And then as far as social assistance, 32,000. Wholesale trade, we saw 21,000. So again, 850,000 jobs added for the month of June, better than expected. But Dagan, the unemployment rate did go to 5.9%. The expectation was 5.7%, Dagan. And as you can see, markets are trending higher. Back to you.
This is a good report if you want this economy to keep growing. Cheryl Casone, thank you so much. Stephanie Pomboy, to you first on this. It's very hard to find anything that might be bad news. 5.9% unemployment rate. I suspect, I haven't gotten into the release, I suspect maybe people are actually out looking for work, that the size of the labor force, people on a job hunt, might have increased. The only kind of like disappointment might be in construction jobs, a loss of 7,000 jobs there. But Stephanie Pomboy, what say you? The floor is yours.
Well, it looks like the labor force did increase, but not very much. It looks like it was about 150,000 gain in the labor force, and the household employment survey was actually down 18,000. So that unemployment rate at 5.9 is definitely a ding on this otherwise stronger number. I guess, it just highlights that it's hard to paint it all with one brush. And this report, so much was hanging on this number because it was viewed as providing the answer to whether and to what extent these emergency federal pandemic programs have been restraining people from coming back into the labor force. And I think it's kind of, wishy-washy in terms of delivering an answer on that. But obviously, as you see businesses, the Wall Street Journal has a piece today about ZipRecruiter reports a tenfold increase in the share of companies offering signing bonuses to get people back to work just in the last 3 months. And obviously, they're gaming this whole emergency assistance program, hoping that by September, if they pay someone a signing bonus, they don't have to actually increase wages. They'll get them back. And then by September, when everyone comes flooding back into the labor force, that wage growth pressure will diminish. I think the Fed is obviously making the same bet. And I think this report, which was being held up as providing the definitive answer on that, doesn't really answer that question. So I think we're going to have to wait for another month's numbers to really see to what extent that is a factor restraining the employment here.
And John Hilsenrath, to that point, the states that have ended the extra unemployment assistance, the extra $300 per week, some of them didn't do it immediately, and that extra unemployment disappears in July. So you do need to potentially wait some time, not to September, but you need to wait another month to figure it out. But just your reaction to the jobs report, the numbers that we got.
Well, I've got 3 things I'll try to say quickly because I know a lot of people want to talk. First of all, the all-star on this panel is Cheryl Casone. This report is 42 pages long, and it's got tens of thousands of number. And she summed it up really well. So she's the all-star. For me, the key numbers here are nines. This is the nines economy. There's more than 9 million job openings and more than 9 million unemployed people. And what's happening right now is the economy in a post-pandemic world is having a hard time matching people to jobs open. That's in part because of these unemployment benefits. People are holding back. I propose that that's maybe not a bad thing because it's a workers' market. It's a chance for them to get bonuses, wages, and the right fit. Those are the second thing. The third point I'll make is about the Fed. The Fed escaped what they call a taper tantrum in the markets. The market freaking out about the Fed pulling back on its bond buying programs. They're now talking about it. They're going to be talking about it over the summer as we see how these numbers unfold. They're not going to do anything for a few more months, and this reinforces that. And I think that's a green light to the markets. I think we're going to see the markets just go off for a little while because the Fed has got the taper tantrum talk out of the way, and they're just going to watch these numbers as we see whether people come back over the next few months.
I'll get back to you on that, John, because they're still buying, not excluding treasuries, $40 billion a month in mortgage securities. And you have a housing market that is, by many estimations, in a huge bubble. So what the heck is the Fed doing? On that note, Steve Moore, John Hilsen, just give me your reaction. I will stifle, you talk.
Yeah, look, I've been saying this for months. This American economy is a rocket ship. This is an incredible recovery we are in. It's spectacular. Reports out this week that the United States ranks #1 in the world, Dagan, in terms of recovery and resilience. Whatever we've done over the last year has been an incredible, incentive to get this economy going. I think the #1 factor here, we just don't talk about it enough, is that Operation Warp Speed was probably the greatest program in the history of the world in terms of getting an economy going. A year ago, a lot of people thought there's no way we would have a vaccine. By now, we do. It's getting people back to work. It's getting our businesses open. It's just an incredible thing to see. God bless America. What an economy we've got going. Let's keep it going. Look, I disagree with John on the unemployment benefits, but putting that aside, this is a very, very hot economy.
I want to get Joni Biley in here on the industries where you're seeing the biggest job growth, and also your reaction on the loss of jobs in construction, Joni.
Yeah, construction's interesting, Dagan, because there is such a strong demand, but we know due to the challenges in supply chain that, builders are having a very difficult time getting, lumber and steel, and that's really slowing down construction. along with the labor shortage. So I think that's kind of the issue there. But when I look at this report, to be honest with you, I think it's a bit of a Goldilocks report. You know, it's not really that hot. It's not that cold. It's a good report. There's job growth in many sectors across the board, with the exception of construction. So that's great. But we didn't see labor participation come back. We didn't see big revisions to the previous months. You know, we're not seeing the wages move as much as I would think we would, because the demand is there. I know we're all talking about it. 9.3 million jobs. We'll get a new number next week. I bet it's going to be quite a bit more. And I can tell you, employers are begging us to find them workers. There are more open requisitions in all sectors, in all industries, and employers are having a really difficult time finding talent. And that's at all levels. So it's a very, very competitive market. It's a great time to be searching for a job and looking for an opportunity. And as John Hilsenrath mentioned before, with the quits rate up, we're going to continue to see that people that are employed are also looking and making job changes right now.
I hear people talking about that all day long, just in New York. Lisa Erickson, we haven't heard from you.
I would agree with Johnny. I think this is a really nice straight down the fairway report. And to our point, it's really because it did come down the middle. So what we saw was really an economy that continues to recover. We're getting some more people back into the workforce, but not at a pace that's excessive, that might cause a little bit more consternation on monetary policy. And in addition, we got some wage gains, but again, not at an overly heated pace. And so that helps to calm some fears about the inflation front. And, we certainly do want to watch that labor force participation rate, but really the key test of that is going to come in the fall when we get more of that back to school, more of the offices reopening and people commuting, and then really, again, more full expiration of those unemployment benefits. So that's really the test when we're really going to be able to see, people coming back into the workforce, as well as, how much hiring may pick up in addition at that time when you've got a more full set of conditions for that to take place.
Mark Tepper, you were expecting this report to be a little light. Nope.
I was wrong. Definitely a good report, higher than I was expecting, obviously. So, look, I do think it's pretty obvious that the rolling off of the unemployment benefits in some states did bring people back to work. It's not consistent with my boots on the ground research here in Ohio, but Ohio's additional benefits ended on June 26th. So I'm not sure that's really enough time. And then there's other states that are, in July, like you mentioned. But just a quick story here. I was talking with one of my employees this week. He lives in an apartment complex, and we all know how hot it's been nationwide. I mean, we hear about it all day long. And they've got a bunch of air conditioning units that are down. And the HVAC company they contract with can't fix any of them because the owner said all his employees quit. So maybe in July, those people go back to work and we can finally fix those air conditioning units when temperatures come back down to the 70s, unfortunately. But the main takeaway for me is this month, June was better than I expected. I think July is going to be even better than June because we're going to have more states roll off these unemployment benefits. And then the real test comes in September when we have the rest of the unemployment benefits roll off as well. Ryan,
what say you, sir?
Well, I think I have to be more Camp John than Camp Steve if I have to, make a stance here. And I think it comes down to, people on the couch per se. They're not on there because they have to be. It's because they want to be. And I think Stephanie said it best. You have a lot of people gaming the system right now, which, in all fairness, if you're making more money on unemployment, you're going to stay at home. But it also speaks to the fact that no one's worried that they can get a job. I think that's the one theme that we're hearing this morning. If that's the case, that just means it's really going to be an employee's market, not an employer's market. And I have to think by the time we get to the fall, the one thing we're going to be talking about, I said this earlier, is we're going to be talking about a labor shortage as everyone comes off those benefits. And we know there's still more job openings than, people that actually lost their job. It's the difference between like 9 million and 8 million. So I think that's a big deal. And I also think that what is the Fed going to start doing here? The numbers are coming in better than better. Are we going to start seeing tapering? And when we see tapering, what does that mean for interest rates? Interest rates have been benign here. at like 1.5% or 1.4%, wherever they are today, I have to think we're going to be talking about higher interest rates, more inflationary pressure come the fall. You heard it here first, and I think that's the one conversation we're not talking about enough, is just how much more inflationary pressure that wages are going to put on the economy.
Dagan, can I make a point about these? A quick point about the unemployment benefits?
Sure.
So, I think it was last week that Joe Biden said that these employers should pay people more money. Remember, he was whispering that. And one of the problems with that analysis, look, I'm all for workers getting paid more, but this idea that all these employers are just going to be able to raise their wages is really problematic for the small businesses. Look, if you run Walmart or Home Depot or Amazon, you can raise your wages. Where I see the real, where the rubber hits the road is for these smaller businesses with maybe 10 or 12 employees, a restaurant or a small mom and pop store, and they have very thin profit margins. And this idea that these businesses are going to be able to just raise their wages and stay in business, I think that's the real challenge right now, is for these smaller businesses.
They're going to raise their prices.
Well, no,
but they can't. That's the point. I mean, there's so much.
Let me get in
the
here
price.
on this, Steve, because I completely agree with you. And Ryan just said, "Will you raise your prices?" But then you really aren't competing with an Amazon or a Walmart or the big box retailer. And John Hilsenrath, it might be a workers and employees market right now. But to Steve Moore's point, this screws over small businesses. The very businesses, the very entrepreneurs who have had the hardest time in the last year and a half, because they don't have the heft and the reach and the price controls to manage their business the way that Amazon or any of the big box retailers did, that have easy shipping, if you will. So this is another gut punch to these businesses, because I see these individuals all the time, people who own small businesses like food trucks here in New York. These are people who get up when I do at 2:30 in the morning, and I see them coming home at 10 o'clock at night, and they work 7 days a week because they can't afford to hire people. So, and it's a tacit way for the government to implement a $15 minimum wage just by, via policy, other than actually raise the minimum wage, John Hilsenrath.
Well, I'm just not so sure if small businesses are being screwed right now. I would just, I would like to see the kind of the evidence and the data. Business is booming. Restaurants are reopening. Those are small businesses. For that food truck, people are back on the street. The Journal has been reporting that a lot of Americans have moved out of big cities to small towns, small metros. Those have small businesses on Main Street. So I'm just not so sure about that. I would like to see more evidence. I just want to come back to one other thing you said about the Fed. The Fed might be overheating the economy, and the government might be overheating the economy with all these benefits. I don't want to dismiss that. My main point is today it's jobs day, and so we should be talking about workers, and this is a really good environment to be a worker. The next 3 months are critical, because that's when the benefits run out. Now's your time to bargain hard, get the bonus, get the signing bonus, get the job you want, because some of these benefits are going to be unwinding in the next few months.